Hello everybody, welcome back. For this stream, we're going to take a look at Bitcoin. We're going to mainly focus on the lower term time frame, as nothing has changed from the higher term time frame and medium term time frame outlooks. So we're going to focus mainly on the lower term time frame. Now, before we jump into it, let's just do a little bit of a recap. So the last time we looked at this, we were pretty much at this leg right here. There was two things that we were really looking for. It was mainly a diagonal structure that we were projecting. And we were looking to dig into this weekly fair value gap. Afterwards, we were expecting a ABC retrace. Alternatively, we could see the structure as being completed with an extended wave 4. And regardless, we were still looking for an ABC retrace. Now, we actually did take this low, and we did dug into this weekly fair value gap. So there's that weekly fair value gap that we dug into. Now it's about managing the structure. This structure right here. This looks very impulsive, and it's got a clear 5-way swing. 1, 2, 3, 4, 5. What this signals to me is that this low is protected as of right now. If this was a 3-wave move, there was potential for attacking this low one more time if this was a flat. But due to the structure being a impulse structure, I can really only see this being a impulse, either for an A wave or for a wave 1. Therefore, after this impulse, we expect a retrace, a 3-wave move. To visualize it better from an Elliott wave perspective, I've got 3 different scenarios here that I'm really looking for. The first way is a bearish perspective, where this high created was a 5th wave of a wave C of a wave B. We pivoted very strongly away from that. Now, this is an unorthodox diagonal here. It's very exaggerated when we look at the 5th wave and compare it to the 3rd wave and the 1st wave. Now, I'm not putting too much weight behind this because of that exaggerated 5th wave. Essentially, we have a longer wave 1, a shorter wave 3, and a wave 5 longer than the wave 3. It's very exaggerated. Regardless, I'm not going to throw it out. Diagonals are very tricky, especially with crypto. So it's something I'm still going to monitor at this time. Nothing's really changed because we still have this as an impulse for an A wave. And we're looking for an A, B, C retrace. Ultimately, take this low for our A wave, retrace up for a B wave, up to this order block on the hourly, and then a continuation downwards to take this low again into this hourly fair value gap. Minimum expectations is we want to retrace 50% of this expansion upwards for a B wave. Alternatively, instead of this being a wave 1, this could be a wave W. if we have a different perspective from the higher time frame. So instead of this being a pivot or a bearish perspective, this is being looked at as a pullback for the bullish perspectives. Either this pivot up here is the minor wave 1, or it's an intermediate wave 3, meaning that this 3-wave correction here is either going to be a minor wave 2, or an intermediate wave 4. So we have some directional confluence on the medium-term time frame as well. In the lower-term time frame, we have even greater wave degree confluence, directional confluence, because once again, this is still an A wave, and we expect an A, B, C retrace for a internal B wave. So nothing's changed here. And then afterwards, we still expect a continuation up for a C wave. The only thing that's changed is that instead of a wave 2, this is being looked at as a wave X. The last perspective that I can see is something that we were talking about in the past streams, where this move from the high down to this current low was a C wave. And this basically is falling in line with the minor wave 1 perspective, where we're either, I gotta move this pivot over here. It's saying that this was a large flat pattern, an A, a B, and then a C. I do find this low probability as well, mainly because of the expansion of that B wave. So when we compare it, it did go beyond the 1382 right there. Although it didn't greatly expand it, and it immediately came back into the range. So it's something that I can consider, but I believe it's more of an exaggerated expanded flats, and it's low probability because it went beyond that 1382. But just to recap, there's that C wave that we were talking about here. Remember, this was either a wave 1 or wave A, or it was a wave C. And we said that the wave 1 and wave A was more probable, and the wave C was less probable, but it was still valid. So from this perspective, I can see this as a flat pattern or a wave 2. If this gets a little more complex, meaning we get this retrace, we get a move up, and we actually take this low before attacking this high, this could be a W wave. Then we get that internal retrace for an X wave, and then we basically look for a Y wave. And we move this wave 2 down over there. Once again, managing expectations, right? Elliott wave helps with the most probable direction and also determining the pivots, higher time frame pivots, and determining the most likely direction to come. Once again, once we dug into this weekly fair value gap, we were looking for a retrace up to take this high and to engage these fair value gaps here. Ultimately, I want to see us go above this 0.5, and that seems very reasonable because of the strength of this impulse. We're already at almost equilibrium of this expansion down. So given that, I think it's very reasonable to expect us to engage this fair value gap on the hourly, or even look for this fair value gap on the 4 hourly. The takeaway here is that on all of our accounts, this low is protected. And we're going to attack this high before we come back down for this low. On all of our accounts, we're looking for an ABC retrace here on all of them. Then we're looking for a break of structure, a continuation up. At this point, it's a matter of if this is a wave 2 up here or if it's a wave X. If we greatly expand beyond this fair value gap on the 4-hour time frame, then I would say that we are actually in this impulsive pattern here that we're monitoring right now potentially. So once again, it's really about managing expectations here. We need to have a little bit more data, wait for this retrace, wait for that break of structure, and that's when things will get tricky. We really need to monitor this zone here, either for a respect to the levels, lack of displacements, and displacement away from it, or see it basically break through this zone with strength to kind of signify that maybe this was a C wave and maybe we are impulsing up for a new bullish leg. So that's pretty much everything that I wanted to go over for right now. If you would like real-time updates, consider joining our Discord in the server. We talk about all assets pretty much at all hours of the day. There's a lot of support there. I answer questions pretty regularly and pretty often, and we also share these updates in real time as well. On top of that, we also have a few other coaches that specialize in other trading methodologies as well. So feel free to jump by, hang out, and as always, you can always message me publicly or privately, and I'll try to get back as soon as possible. But I hope everyone enjoys the rest of the weekend, and thanks for watching. I'll catch everyone later.